Nifty poised for a potential 184-point surge today. Can bulls break through resistance? Welcome to Trade Vision Pre-Market Report. Good morning, traders. Welcome to Trade Vision Pre-Market Report. Today, 2026, July 30th, Thursday, marks another vibrant day. It is Sensex expiry day. Let us deep dive into the detailed reports. The Federal Reserve kept its benchmark interest rate unchanged at 3.50 to 3.75%, though three FOMC members dissented, advocating for a quarter-point hike amid persistently elevated inflation and elevated uncertainty tied partly to Middle East conflict. This split decision leaves room for a hawkish tilt in future policy guidance, potentially keeping borrowing costs firm for Indian corporates and dampening broader equity valuations, particularly in rate-sensitive sectors like financials and real estate. Middle East hostilities escalated significantly, with reports of Iranian missile attacks intercepted by US and Saudi forces, alongside Iran rejecting an Omani proposal on the Strait of Hormuz, driving crude oil prices up sharply. This immediate surge in Brent and WTI futures could reignite inflationary pressures in India, putting the spotlight on import-dependent sectors like auto and aviation and weighing on manufacturing costs, potentially dampening consumer sentiment. The U.S. administration has implemented new Section 301 tariffs ranging from 10% to 12.5%, targeting 60 economies, including India, citing concerns over forced labor practices. This trade action places a direct cost burden on Indian exports to the US, particularly for manufacturing and textile sectors, potentially moderating export growth and pressuring profit margins for companies heavily reliant on the American market, while challenging overall trade sentiment. HDFC Bank has implemented disciplinary measures against senior executives, including its MD and CEO and CFO, following an internal vigilance investigation into business overreach concerning deposit arrangements that showed discrepancies with RBI directives. This action puts the spotlight on corporate governance and regulatory compliance within India's largest private lender, potentially weighing on sentiment for the broader banking sector as scrutiny around internal controls intensifies. The U.S. Senate advanced a Russia sanctions bill proposing 100% tariffs on nations importing Russian oil, potentially impacting India. While India's Commerce Minister dismissed the threat as speculation, affirming US trade deals are on track, this move introduces geopolitical uncertainty, which may prompt cautious sentiment for India's energy security and export-oriented sectors. Renewed military escalation in the Middle East saw US-Saudi airstrikes target Iran-backed militias in Iraq, met by an Iranian missile barrage intercepted by Jordan and the US. Global oil prices surged on these tensions, with Red Sea shipping activity reportedly down 50% in tonnage terms. This escalation raises global supply concerns, keeping crude benchmarks elevated and likely weighing on India's significant energy import bill and domestic inflation outlook, particularly for sectors like logistics and manufacturing. Ukrainian forces successfully struck two significant Russian oil refineries overnight, deep within Russian territory, escalating their campaign to disrupt Moscow's fuel supplies. These long-range drone attacks, including one in the Perm region over 900 miles away, could further tighten global energy markets. This development may lend support to higher crude prices, impacting India's oil import costs and potentially pressuring the rupee against major currencies, keeping the focus on energy sector profitability and fiscal management. A 7.1 magnitude earthquake struck Japan's Kyushu island, prompting key automotive and semiconductor manufacturers, including Toyota, to halt production at several plants through July 31st. While analysts suggest the impact on supply chains may be temporary, Kyushu is a crucial hub for these industries. This event could introduce short-term logistical challenges and raw material price volatility, leaving room for some cautious trading in Indian auto component and technology sectors today, though a broader market impact remains contained for now. INOX Green Energy Services demerger sees INOX Renewable Solutions included across multiple Nifty indices at zero value, effective July 31st, necessitating a special pre-open session. This corporate action keeps index fund managers focused on rebalancing activities, potentially creating technical movements in constituent stocks within the Nifty Microcap 250 and Small-Cap 500, as passive funds adjust their portfolios to reflect the new structure. Grant Thornton Advisors' $5 billion all-cash acquisition of CBIZ will create a major professional services firm in the US, with CBIZ's benefits business spinning off. This substantial M&A activity underscores global market confidence and robust deal-making appetite, which may lend support to broader market sentiment in India and put the spotlight on valuations for domestic professional services or financial advisory firms.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Comment your love and share your happiness. Let's win together!
Foreign institutions were net buyers, adding nearly 3,000 crore rupees. Domestic institutions also bought, contributing almost 1,000 crore rupees. This combined buying points to a positive day for the market. If we look at yesterday's sectoral data, we see a clear rotation, with money moving out of Nifty Energy and Nifty Oil and Gas, which both showed negative weekly momentum. Conversely, Nifty IT and Nifty Media are strengthening significantly, posting robust daily gains and strong weekly momentum, indicating these are key areas for traders to position today. Let us look at global events. The Reserve Bank of India's Monetary Policy Committee will announce its decision on August 5, 2026, around 11:45 a.m. IST. The market anticipates a hold on the repo rate at 6.50%. The United States' second quarter gross domestic product advance estimate, released today, July 30, 2026, at 6 p.m. IST, showed an annualized growth of 2.3%, beating the 2.1% expectation. India's industrial output for June, released on July 28, surged by 7.3% year-on-year, significantly beating May's 5.0%. This strong growth, driven by manufacturing, is a positive signal for the Indian economy, likely boosting industrial and manufacturing stocks. The U.S. Federal Reserve, in its July 29th meeting, kept interest rates unchanged at 3.50 to 3.75%. However, three policymakers dissented, pushing for a quarter-point hike, signaling persistent inflation concerns. Today, Thursday, July 30, at 6 p.m. Indian Standard Time, the United States will release its June 2026 Core PCE Price Index. This crucial inflation data is expected to show a year-over-year increase of 3.4%. Global markets showed a mixed picture. Asia saw strong gains in Japan and Hong Kong, but Taiwan fell sharply. European indices were mostly flat to negative, while US futures point slightly higher. India's Nifty will likely open flat or slightly down. Now let's move on to some stocks highlighted in today's news updates. Adani Ports and Special Economic Zone is actively evaluating a substantial $13.3 billion bid for Associated British Ports, the United Kingdom's largest port operator. Novartis India sees a major change in ownership as Novartis AG sold its 70.68% stake to a Christ Capital-led consortium. Eicher Motors is in focus after announcing a significant 1,225 crore rupee greenfield expansion plan in Andhra Pradesh and posting stronger than expected first quarter results. Larsen & Toubro reported robust first quarter earnings with consolidated. Let's check what the R.A.S levels are saying about today's Nifty levels. We're looking at a breakout level of 24,220 and a breakdown level of 24,203. Should the market turn bullish, resistances to watch are R1 at 24,280, R2 at 24,340 and R3 at 24,400. If the market falls, supports are S1 at 24,144, S2 at 24,084 and S3 at 24,024. Today's CPR levels show TC at 24,237, Pivot at 24,224 and BC at 24,210. Analyzing the options matrix and derivative distribution, we observe significant recalibration for the 2026 August 4th expiry, with the max pain anchor shifting upwards to 24,200 from 24,000, underpinned by a robust increase in the put-call ratio to 1.049 from 0.821. This indicates a potential short covering bias within the 23,000 to 24,200 demand zone, whilst 24,600 to 25,000 remains a formidable resistance wall, anchored by maximum call open interest at 25,000, suggesting a tactical range-bound approach persists, targeting 24,200 as the immediate equilibrium point. The India VIX closed at 12.01, reflecting a 4.38% fall from its previous close of 12.56. This low VIX indicates reduced market fear and volatility, with a mixed 5-day trend. This suggests potentially stable Nifty movements, but caution is still advised as lower VIX at higher market levels can precede sharp moves. The CPR is positioned at TC 24,237, Pivot 24,224, BC 24,210, expecting normal movements in the market today. Gift Nifty opened at 24,275, a 28-point gap down from Nifty's previous close of 24,303. This gap-down opening, falling outside the flat band, indicates a likely bearish start for Nifty 50 today, requiring confirmation during market open. The no-trade sideways zone is identified between 24,203 and 24,220, suggesting aimless movement within this range. A breakout above 24,220 could yield 184 points upside, reaching 24,405. Conversely, a breakdown below 24,203 might lead to a 108 points downside, targeting 24,096. Previous trading day, Nifty moved 74 points in a bullish manner. The weekly move stands at 322 points and the monthly move at 353 points. The close did not sit tight against either extreme, indicating no strong directional carryover signal into today's session. And now, the moment you've been waiting for, today's final market verdict. Indian markets are showing a strong bullish lean today, driven by substantial buying from both foreign and domestic institutional investors, totaling nearly 4,000 crore rupees. The Nifty, Sensex and Finnifty all saw gains of over 1%. Nifty futures registered a clear long buildup, rising 75 points with a premium over spot. Market breadth is also very strong, with 38 out of 50 Nifty stocks advancing. Technology and metal sectors led the charge, both up over 2%. However, there are some cautionary signals. The fear index, India VIX, while falling, has seen a mixed trend over the past 5 days. Critically, all major indices, including Nifty and Sensex, are indicating a bearish bias on our custom R.A.S. E.M.A trend. Options data suggests a trading range, with significant resistance around 24,600 and 25,000 on Nifty. Global markets are also sending mixed signals. Weighing these signals together, we anticipate a bullish bias for the market, but traders should remain vigilant due to conflicting technical indicators. And that wraps up today's Trade Vision pre-market report. We hope you'll subscribe and hit that notification bell so you never miss our daily updates. If you found today's broadcast useful, please like and share the video. And do share your thoughts and advice in the comments below. We truly wish you a most prosperous day of trading.